prescriptions, and handle all the complicated billing and insurance stuff. This is a business that's all about efficiency. As healthcare costs continue to rise, everyone from small independent pharmacies to big hospital chains is looking for ways to cut costs and improve service. That's where a company like SRX comes in. The stock, SRXH, has been on a wild ride. This is another small cap name that has seen some big swings. Over the past year, it's been a battleground stock. It traded below $1 for a while, then some positive news sent it soaring. We saw it spike to nearly $4 earlier this year, on the back of strong quarterly results that beat expectations. But the momentum didn't last, and it's pulled back to the $2.50 level. Historically, SRX Health Solutions has struggled with profitability. They are investing heavily in research and development, sales, and marketing to capture a larger piece of the market. This means they are burning through cash now in the hopes of generating big profits later. The big question is whether they can scale up their operations and finally achieve consistent profitability before they run out of money. It's a race against time. So, what's my verdict on SRXH? This is a speculative play, but it's in a much more compelling industry than a luxury ski brand. I'm calling this one a hold. For new money, I'd wait for another quarter or two of solid results to prove the turnaround is real before jumping in. Alright, let's get into the biotech arena. This is where fortunes are made and lost overnight. Our first contender is Biotech, ticker IOBT. This is a clinical stage biopharmaceutical company. In plain English, that means they are developing new drugs but don't have any products on the market yet. They're focused on creating therapies for rare diseases and cancers, which is a hot area in medicine. The whole story here is about their drug pipeline. They have a few promising candidates that are in early to mid-stage clinical trials. If just one of these drugs gets approved by the FDA, the stock could go from a few dollars to hundreds of dollars. It's a lottery ticket. IOBT's stock chart looks like a heart monitor. It's full of sharp spikes and steep drops. These moves are almost always tied to news about their clinical trials. A press release about positive data from a phase 1 trial can send the stock soaring 100% or more in a single day. On the flip side, news of a trial failure or a delay can cut the stock in half. When you look at the financials for a company like Biotech, you won't see any revenue or profits. All you'll see is cash burn. These companies spend tens of millions of dollars a year on research and development without a single dollar of sales coming in. Their survival depends on their ability to raise money from investors to fund their operations. They do this by selling more stock, which can dilute the value for existing shareholders. My call on IOBT: this is the definition of a high-risk, high-reward investment. For a new investor, my advice is crystal clear: sell, stay away. You have no business being in a stock like this until you have years of experience and a